things don't always stay the same, and history's shown us that. With markets making newer highs, it is definitely getting harder and harder to figure out what individual stocks should you be buying, should you be taking profits, and what should be the next move going forward. And with a pretty controversial presidential election just around the corner and Israel retaliating on Iran, things are definitely heating up as markets are hitting new highs. Now, it's my belief, using some technical analysis, that the end of October into beginning of December was going to be a pretty volatile month. We've been watching a VIX that's been pretty irrelevant over the last few years, now all of a sudden start creeping its head up, and we're seeing the volatility tick up steadily and more consistently as the market's making newer highs and as political tension picks up. We're watching levels like debt to GDP at astounding levels of 120% and the Buffett indicators screaming red at 209%. That's the total stock market value divided by the annualized GDP, what we actually produce as a country. This tends to be a very good indicator when things get frothy, and boy, things look to be getting pretty frothy here. Now, before we get too doom and gloom, there is some things here I want to talk through. When we go back to 1990, we can see that the S&P 500 was assembled much differently than it is today, to say the least. The largest weighted cap company was ExxonMobil, followed by IBM, Lowe's, Raytheon, Bristol-Myers Squibb, Merck, Coca-Cola, Walmart, GE, and so on and so forth. There's not as much technology as there is today. Fast forward to 2024, and we see that technology is the vast majority of what the S&P 500 is made up of. We have Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, Tesla, Berkshire. So historically, we're trading for a higher valuation when we look at the stock market. But on the contrary, we're diverse a little bit differently here. Technology is a heavier weighting in a lot of our indexes, and technology has better margins, better growth, and higher multiples. So by those indicators, can we justify that the market deserves to be trading for a higher multiple? And I think the answer is possibly yes. But the problem I have with this is, number one, most indexes are too exposed to these companies. And the question becomes, how much further can they grow? These are trillion-dollar companies. Can they really go to 10, 15, 20 trillion dollars at this point in time? Maybe. But my money is on that somewhere underneath these massive companies are better opportunities. And I do think that the market is a little expensive, and I also think we value these technology companies a little too much. Now, when we look at 1999, Microsoft, GE, and Intel were the big companies, and this was just as the dot-com boom was taking off. We go to 2000, Microsoft, GE, and Cisco Systems are now the leading companies. And when we go to 2001, it's General Electric, ExxonMobil, Cisco Systems, Pfizer. And as most of you know, Cisco Systems was probably the biggest bubble in all of technology. Now, as of today, while I think some of these companies trade for a substantial premium, I wouldn't say they're necessarily in a bubble. More so, a correction needs to possibly happen for them to make more sense on a valuation standpoint. But then I always think to myself, what would Warren Buffett do? What has he been doing? Warren Buffett is possibly one of the largest bulls on all of Wall Street. He never really takes a short position, but you do have to pay attention when he's willing to sell. This is a guy who buys and holds forever. And over the last 7 quarters, he's been a net seller of stocks, with his largest sales coming in Q2 of 2024 at a whopping $75.5 billion. Now, we watched the S&P 500 shift the companies in and out over the last 30 plus years. And over the last 5 years, technology has had a heck of a run, and it's definitely led this market to newer highs. And everybody's still betting on technology. But history's shown us that we could see new leaders here. And could we see a new regime where maybe utilities is leading the way, energy's leading the way, or healthcare is leading the way? So with US debts running at levels we've never seen before, valuations extremely high, heck of a run in technology, could we see new leadership in the S&P 500? And then you have Warren Buffett being a net seller of stocks for 7 consecutive quarters. All signs are pointing to maybe this market is a little overvalued, and maybe it's okay to be patient. Take some time, build some cash, because sometimes doing nothing can be the right thing.